And we are live. GM, everyone. Welcome back to the SolanaFloor weekly recap. I'm Jack Dunham, and of course, always joined by our senior journalist, Finn Miller. GM Finn.
GM Jack, how are we getting on?
We are getting on. It's a tough one. We're also joined by the wonderful Mr. Thomas Bahamas from just across the pond, GM Thomas.
GM, everybody.
Now, I have to say right at the beginning, it has been a truly humbling week for so many traders, myself included, so many investors, both on the retail side and on the institutional side. People are rather shocked by what they're seeing in the markets. We're going to start with price because it is an absolute bloodbath of a week, unfortunately. And to me, at least, it seems like the bleeding is not going to slow down today. Zcash price action is potentially the biggest story of the week. Finn Thomas, we are going to talk about the vulnerability that was found by Claude, I might add. But very quickly, BTC is down to $60,000. ETH is at about 1.5K. Sol down to $65. Hype also crashed down to about 62. We're going to talk about that in just a second. It's not looking good, is it?
Not at all, Jack. It's as you said rightly, it's been a pretty debilitating week. Obviously, Saylor finally broke his promise, and he trickled a little 32 BTC sell into the bucket, and that basically unraveled the threads of this entire market. So, look, he wanted to inoculate the market. He gave us a full-on plague. I hope we can shrug this off reasonably quickly. Thomas, thoughts?
Yeah, it's just brutal out there. I mean, I don't know what to say. You know, it's like there just doesn't seem like there's any good news out there. So, you know, I'm hoping we can kind of like break it down. And I think towards the end, we can find some positivity, right?
But there is some good news. There is always bound to be good news because we, aside from doing the news, also talk to some of the gigabrain builders out there that have been through thick and thin, multiple bull and bear markets, and they seem more optimistic than ever before. We talk a lot about this sort of decoupling of price and fundamentals. We'll get to that in a second because I think it's a very interesting angle, and it's all going to tie into what builders are doing on chain today as we watch prices collapse. Now, Zcash, we mentioned that a second ago, the vulnerability was found by Claude, which blows my mind. It's an absolutely wild, wild story. AI finding a vulnerability in arguably one of the most revered privacy coins at the moment. Potentially, the vulnerability is up to 4 years old. And people are saying that it's difficult to gauge to what extent it has already been exploited or whether it's not been exploited, but it could be in the future. Now, as you can imagine, the insane sell-off that followed that news was heartbreaking to many, from around $540 a pop down to $250. I think it's currently trading at about $340 a pop, much to my disappointment. Really one of the steepest sell-offs that I've seen since October 10 last year. Feels like it blindsided a vast majority of CT, right?
Yeah, look, a lot of people
Definitely.
were seeing Zcash as the safe haven against BTC. You know, with all the quantum risks flying around, all the desire for privacy and to obfuscate your funds a lot better, people were saying that Zcash was actually going to be the savior of BTC. You know, there was a huge amount of flow going from BTC to Zcash, and that's been completely erased in one fell swoop. Because Zcash hired an investigator, and the investigator went to Claude and said, "Hey, is there a vulnerability in this program?" And Claude said, "Well, you might be onto something there." So look, very, very difficult to stomach. And the knock-on effects of this, obviously, is that if this is the case for Zcash, how many other similar protocols could be affected and could be made vulnerable by someone with a Claude subscription? You know, it is very scary out there. But again, we don't know for sure that Zcash has actually been exploited. As we've said,
True.
it's more that potentially it has been, and no, there's no way of knowing. So that almost adds a layer of fear. It makes it difficult to move on for a lot of people.
Yeah, definitely. I think that something you said there is like we don't know the extent of what we're going to be seeing, right? Like in my mind, I'd use like the Zcash developers as like some of the top cryptographers in the world, right? You know, so they went out and they found a bug pretty much first try with Opus 4.8, right? So they found the bug, they patched it, they hard forked, they got through it, right? We don't know exactly the extent of whether it was actually exploited or not because it's all in the privacy pool, right? So you can't actually count the coins that are in there. But I mean, these are the top people that were looking at this. They hired a security team looking at it. Whether other chains are doing this or not is what scares me, right? So we'll see the extent of this. Obviously, we see this in the price. I had a funny thought this morning. I ordered one of those Keystone wallets, and the Zcash rally didn't last long enough for me to actually use the Keystone wallet with any Zcash.
Yeah, the one thing we can probably say for certain is that more volatility lies ahead. I think
Yeah.
which way price action is going to go for any one of these tokens, let alone something that was recently discovered to have a potential vulnerability, is so difficult to tell. So if, like me, you're making the mistake of trading with leverage, caution, because you're going to get wrecked. Now, another story of people getting wrecked is about hype, of course. Arthur Hayes, as you've likely seen on CT, was predicting $150 price target for hype. This happened around the 30th of the month, I believe. Then within 5 days, he dumped his entire position for $18 million of profit. As you'd expect, there were hundreds, maybe even thousands of people who aped into hype, anywhere around $50 to $75, 75 being the all-time high. And I suspect a good chunk of them did not expect prices to crash so sharply, so quickly, down to about $60. So Mert, one of our favorite Solana founders, called Arthur Hayes out in an interview yesterday with CoinDesk, saying, if you're willingly trading because a KOL or some famous person on the internet told you to do something, then you should know the game that you're playing and you shouldn't get pissed off when they dump on you. He also said nobody ever made a lot of money because they're copy trading some famous guy, which, to be fair, I take a bit of an issue with. Think back to the NFT bonanza days. Think back to the meme coin craze. You had people like Ansem, Murad, a bunch of these NFT gurus. Now, people actually did make a lot of money by copy trading, but if they sold, right? And the issue here is if somebody like Arthur Hayes, who's a founder, revered KOL, if he sets a price target of 150 and sells within 4 or 5 days, you expect people to be a little bit angry because they're being treated like exit liquidity. The same thing happened with Ansem's very high price targets for meme coins back in the day. Murad, to his sort of own defense, didn't sell, and he's now sitting on, he's round tripped a large amount of money. But the point here is, if you follow somebody into a very high price target, you need to be willing to take profits. Otherwise, you probably are playing a very PvP game, and you might end up being exit liquidity. What do we think about the beef that's forming here between Mert and Arthur Hayes?
I side with Mert. I mean, he's right. Like this has been something that's kind of plagued crypto for a long time, is like big KOLs with big audiences shilling coins, you know, saying that they believe in them for the long term and then dumping them. Like Arthur's done this forever, right? Like anybody that's like copy trading Arthur is probably wrecked, you know, like, and this goes a long way. Like, and I think the hard part about this is like, you don't actually learn your lesson on this until it happens to you. So this happened to me like a long time ago. I bought some stupid coin called Dragon Coin. It was supposed to be the future, and everybody was shilling it on crypto Twitter. I bought it at like $2, and I think I still have some in an old wallet, and it's worth zero. Like literally like negative 99.8% on this coin. So like I learned my lesson that way, and it's like unfortunate that a lot of people have to learn their lesson this way. But like it's hard to, I mean, it's hard to follow traders, right? Like Arthur Hayes at the end of the day is like a trader, right? So he has like big convictions, but if something changes, he's selling that on a dime. And
Worth reiterating, exactly. And he made $18 million of profit. Right?
Yeah.
I think that's really the crux of it here. He made $18 million of profit after calling for a $150 price target, and he sold everything practically at the top, I think between $73 and $75. So there is a very expensive lesson to be learned for many traders.
But I think also this is kind of the trap that a lot of quite high profile traders fall into, is that Arthur Hayes obviously was very optimistic and bullish on hype. He called it a $150 asset. He took his position, and then circumstances changed. Maybe the thesis changes, maybe the markets change. And you have to be able to adapt your strategy. You have to be able to adapt your thesis. Maybe he, you know, wants to get a bit more on the next pullback and he wants to re-enter around $40. That doesn't change the thesis that hype is a $150 asset at some point. But you know, a lot of people, they read one thing, they ignore the context that surrounds that. So you know, hype could go to $150 in the next few years. Arthur Hayes would be correct, but he's going to get a lot of flack for the scalp. At the same time, I do agree that, you know, you should not say this asset's going to $150 and then sell 4 days later. I think that's terrible optics. I think a lot of people got wrecked. I also think if you play stupid games, you're going to win stupid prizes, and people need to think a bit more for themselves in this game.
Should he have tweeted before he sold? Should he have said, "Sorry guys, thesis changed. I'm actually going to dump this entire position, and I'm sitting on an $18 million green P&L right now, just to let everyone know, if you are online, I'm dumping on you." Should he have done that?
I think that also would have been quite badly viewed. I think as soon as you take a public position, you are at the whims and at the mercy of that very same public position.
I agree, and I think Mert makes a very important point here. He also went on to add, by the way, that many people also consider him to be a KOL in some sense, and that they shouldn't blindly follow him into any trade. They should think about what his thesis is and try and argue their ways against it. One other thing I really think is important that we talk about here is this decoupling thesis. We very briefly mentioned it. For months now, we've been talking about this decoupling of price and fundamentals. Fundamentals are arguably better than they ever have been, both in terms of adoption, institutional adoption, but also the technology adoption, both in terms of regulatory clarity and the amount of usage that we're seeing, mature assets coming on chain. But as you all know by now, price is not doing what we expect it to do. I want to play a very, very short 30-second clip from Bloomberg ETF analyst here, Eric Balchunas. He's definitely got his sort of finger on the pulse, if you will, of Wall Street, and it really captures what he's saying here: the industry's frustration, this very wide scale frustration that we're all feeling right now, and it talks to the root cause, I think, of why our expectations haven't yet been met. So I'm going to share my screen here. It's a very, very short clip. Bear with me. And then I'm curious, Finn and Thomas, what you guys make of this. Is he right, or is he missing the point entirely?
The only thing I do worry about, and I think this is something where the industry itself has to kind of figure this out, is the messaging shouldn't only be, hey, the boomers are coming. That makes it seem more Ponzi-ish, like we just need more investors. I think the message is that the fundamental purpose and value here is that the government is going to print money like crazy no matter who's president. And if you want a hedge, something that the government cannot debase, this is a powerful asset for that, similar to gold. The only thing...
What do we think? Is he right?
He's absolutely right. He's absolutely right. Yeah, the thesis of the boomers are going to buy obviously is flawed in the sense that you can't just be waiting for someone else to buy. There needs to be a reason for them to do that. Currency debasement is coming whether we like it or not. There are 1,000 ways of hedging against that. I still believe that Bitcoin is one of the stronger aspects of that for all the reasons that we already know. It's inflation resistant. It has a set supply. Self-custody, obviously critically important in this day and age. I would 100% agree with Belchunas there. Thomas, what do you think?
Yeah, I also agree. It's it's tough when you look in the short term. Things are looking pretty red. You see charts like Zcash that's down 40%, and it's hard to kind of like reconnect back to the big picture of like what we're doing here. But I mean, he's 100% right. It's like what crypto is building is something outside the system, something that is much more reliable than the traditional ways. So I definitely agree. I am still a Bitcoin believer, but man, is it tough when you see what Saylor is tweeting out. But yeah, I don't know. Jack, what are your thoughts on that? I think it's a great video.
I think he's spot on in terms of how much we've relied on this idea that TradFi is going to come and buy our bags, numbers going to go up indefinitely, we're all going to be sailing off into the sunset on a boat made of gold. Clearly, that is an unrealistic set of expectations to have. And between mid 2024 and middle of 2026 now, the last 24 months has shown us just how misplaced some of those expectations were. I think the issue that I have with it is, how does an industry that's somewhere between $2.5 and $4 trillion of value rebrand? How do we go back to sort of refine the messaging to being an inflation hedge when we've dealt with so many hurdles, so many perception issues? We are constantly under attack from state actors like DPRK and the Lazarus Group. There's constant hacks to DeFi. So yeah, I think there's a few things that we need to iron out. It all sort of ties into this privacy narrative and the vulnerability that was found by, as TB mentioned, Claude's Opus 4.8, which is not even the most powerful model out there. So we're definitely going to be following this in the coming weeks. Another angle I want to introduce here is Charles Hoskinson, Cardano founder, also announced that he's taking a break from all the madness this week. So, I mean, to your point, TB, if you combine all of this with Saylor selling, even though it was 32 BTC, as Finn pointed out, Hayes selling the top, Zcash sort of imploding, vulnerabilities being discovered. It's a lot of negativity on the timeline. And this, I think, is the ideal time to shift our attention more specifically to some of the Solana builders and projects, because the builders are building, the shippers, as they always do, are shipping. And that's sort of the theme, if you will, of this week's newsletter that Finn's written. We had a great conversation with G2's co-founder Lucas yesterday. The amount of innovation that's happening, I think, on the DeFi front, on the trading front, on the perps fronts, is really, really exciting to me. So that's what I want to focus on today, the optimism from the builders.
Yeah, and I would echo that. Solana at a fundamental level, at a technical level, has never looked better. And now we're at $60. We're probably a good 3 or 4 times better at a technical level than we were when Solana was $200. So look, I'm very, very optimistic. I think, as I said last week, we're going to have a few months of chop. It's going to be a bit shrouded in doom and gloom and despair for a while, but ultimately Solana is going to come out on top of this. Solana is still the most performant L1 in the entire industry. That's only going to improve with a lot of the network updates that are coming. So very, very excited long term for Solana.
Yeah, 100%. And I mean, we were saying before we started the show, how Solana's kind of caught in the wind with Bitcoin and ETH, having a bunch of issues right now, right? So it's like caught in the majors and caught in crypto, but it's not like people aren't dumping Solana because of the narrative, right? And the other side of that as well is like teams are still shipping, right? Lucas from Jito was on yesterday, and he was so excited about what people are building, what they're building at JTX. Like, it's kind of contagious as to like, what is actually going on in the Solana ecosystem, how much they're building, how much teams are competing, fun new products that people are building. So it's an interesting, dichotomy where it's like one side you look at the charts not looking good, but the other side it's like that's not necessarily, specifically talking about the fundamentals of Solana, right? Like the price isn't really matching what's going on.
The bear is the builders.
I mean,
the builders typically have a much better time in the bear market than the traders. So maybe new rule is just you're not allowed to look at charts when we're this deep in the bear market. But Finn, open us up, because we're talking about all this negativity that's front and sort of center. All we can see is the charts. Deep down, a lot of optimism, a lot of bullish energy from the builders, as TB's saying. So Curious which 6 stories made it into your newsletter this week, given how terrible it's been for price action.
Yes, a terrible week for price action, but at the same time, a brilliant week for Solana at a technical level. A lot of new SIMDs coming out that I'm very, very excited about, and I'm very much looking forward to discussing with you guys to kind of get to the real root of how impactful this is going to be. Aside from Zcash, aside from Michael Saylor imploding his lovely financial alchemy scheme, we've got some great SIMDs on the way. Otherwise, Jupiter has launched Solana's first Solana native prediction market using prop minimum liquidity. I think that's a brilliant move with the World Cup coming just next week. Certora has proven that P token is the real deal. This is going to be a new token standard that's going to replace the SPL, and it's going to be about 20 times more efficient. So that's going to deliver on the IB side of the IBRL thesis. And Helium Mobile has been acquired by former US presidential candidate. So look, things are happening all over the place in Solana. Price is only one way of looking at this industry. I think there's a lot of great trajectory happening elsewhere. So we can get stuck right into all these big stories here.
Yeah, that one honestly took me by surprise, and I'm really curious to get your guys' take on Andrew Yang, former presidential candidate, acquiring Helium Mobile. Really excited to discuss that. Story number 1, as you can see, we did touch on this briefly in the intro. 1.76 billion dollars liquidated from crypto markets as Saylor breaks never sell promise. Now the total weekly liquidation amount is closer to 5.5 billion as we speak. So it's been pretty savage over the last 5-6 days. Biggest liquidation event since February 5th. Over $1.5 billion of it was longs. So it all comes down to Saylor selling 32 BTC. Now you'd expect that not to create a massive market-wide cascade, but it did. There's a few other angles that play into this. Iran suspended negotiations with the US. Sol is at its lowest price since December 2023. It's a bit of a nightmare. So the question, Finn, is Saylor's decision to sell 32 BTC really going to be the sort of final nail in the coffin, or what's going on here?
It's tough to answer because it depends a whole lot on what happens to the rest of Strategy's BTC stack. We've been quite skeptical and quite critical of this stretch phenomenon that Strategy's been running. You can't promise 10% returns with infinite dividends without having some kind of cash flow to back that up. Look, it has been financial alchemy. I think these things never really work. It's been compared to the Terra Luna scandal of 2022. I remember that very well as someone who had a lot of Luna at the time. So look, it's not looking good. Saylor, made a small measly sale of 32 BTC as part of their $52 billion stack. The idea was to prove that it's a liquid asset and inoculate the market against the idea that, Strategy may need to sell Bitcoin in the future. And it has caused a complete unraveling in the very fabric of the market. So a terrible proof of concept for this idea of liquidity. Markets are completely falling apart because of that. And like you mentioned, we've also got suspensions in the Iran-US talks. So no one really knows what's going to go on there. I think there's been so much back and forth between the US and Iran that people are actually a bit fatigued by this market. There's been total chaos in oil prices as well from that. And I think at this point, Trump just wants to get a deal done so they can walk away. And depending on the deal, that could actually end up badly for markets as well. So people are a bit fatigued by this. People are over it and just wanting an immediate resolution. I don't know that a resolution is going to be helping there. But look, otherwise, Solana ETF flows were looking strong until this. We had about 21 straight days without outflows. And then just yesterday, I think we lost around 17 million in outflows on the Solana ETFs as well. So look, Saylor sold some Bitcoin. It all unraveled. The question now becomes what happens next. Thomas, how are you viewing this? How are you looking at Saylor selling? What do you think comes next for Stretch? Is this going to liquidate the entire stack that Strategy holds moving forward?
Yeah, I mean, all right, I'm going to say it. Saylor should not have sold his Bitcoin, right? Like that's his whole brand. His whole brand is like, buy the Bitcoin, don't sell it, sell your kidneys, whatever, buy more Bitcoin and don't sell it. And then he sold some Bitcoin, it's like the 32 Bitcoin, it doesn't, the amount doesn't matter, but like the amount of damage that it did is just indescribable. And, it's like, now it comes to the point of, okay, like if he broke that promise, like what else is going to happen? Everybody's kind of questioning his schemes that, when the price was going up, we're fine, but now, the other side of that, what is he down $12 billion at this point? He's down quite a bit. You've got this weird Ponzi going on. So, I mean, I just want that to be like as limited as possible. And like I don't see a way where that's really going to happen. So it makes it tough, with Bitcoin kind of looming over us like that. It sucks that Souls, we're actually seeing some outflows from their ETF as well. And it kind of makes me think about the bigger ecosystem as well. Our tokens on top of Solana going to be outperforming, just like the base asset, which, that's one of the things that we're bullish on, right? We're bullish on teams building. We're bullish on people launching, awesome protocols on top of Solana. So is that going to be the way forward? Are we going to be looking more at tokens? Maybe. I mean, what excites me is what people are building on top of Solana, right? So I think that's interesting. I don't know. I don't know where we go from here. I think that it's just going to take some time. I don't think you should be staring at the 5-minute charts.
Definitely don't do that. It's going to give
Yeah.
you a lot of anxiety. I did it quite a bit this morning. It didn't work out for me. You know what I find interesting though, TB, is that Finn was pulling his punches. He called it financial alchemy there a couple of times, and you went straight in for the Ponzi. You called it a Ponzi with zero hesitation. So there's that as well. Clearly, two sides to every story. I'm really curious to see what happens to the wider digital asset treasury ecosystem, if you can call it that. There's a long list of digital asset treasuries, from Saylor's strategy to Bitmine is another one that's massively down at the moment. There are many Solana DATs. I think someone, maybe Wu Blockchain, mistakenly posted this morning that Forward Industries had moved some Sol and that they were going to sell it. But kudos to the SolanaFloor journalists who realized that was incorrect information and corrected them. So yeah, there's a lot happening on the digital asset front. We've been covering it. Are they dead? Are they dying? We don't know. Do they pose systemic risk to the entire industry? Well, I think we're getting closer to an answer on that front, at least, because if Saylor sells 32 BTC and this is the unwinding that sort of results from it, then I cannot imagine what happens to the price of Sol if some of these digital asset treasuries that are holding millions and millions of Sol start dumping. And as we know, they are all massively underwater as well. Any thoughts on Solana digital asset treasuries? Do you reckon it's safe to say that one of the biggest risks to Sol price right now is a potential DAT unwinding bonanza?
I wouldn't push against the DAT unwinding. I think that might actually be healthy for the ecosystem. I think it might be good to remove some of this overhang. The thing that scares me the most, though, is that Strategy currently holds around 840,000 Bitcoin. Now, if you go back to Terra Luna time, we look back at 2022, Do Kwon's LFG fund had around 80k BTC, I believe, maybe a bit more or less. So Strategy holds 10 times more BTC than Do Kwon's LFG fund ever did. So if that actually gets fully liquidated, we're going to have a catastrophic unraveling on our hands. So
surely it's game over.
Well, it's game over briefly, but then people realize that actually the tech still works. All the reasons for crypto to exist are still in place. Internet capital markets still proves itself out. Maybe prices are bad, but the tech still works. So I think it would just be a full reset on the market, and it would probably wash out a lot of the vapor that exists in this industry.
Interesting.
Then, the cream of the crop would rise. So
yeah, Matt Hogan made a very similar point. He was talking about the BTC ETF outflows, and he's basically saying the weaker hands have sold, and the tourists are leaving the ETF landscape. They were the last in and then the first out, and the people that have invested for the long term, the ETF holders, like Bitwise, I suppose he was talking about, people that are holding these assets for the long term aren't going anywhere because, to your point, Finn, the tech still works, and maybe we need to sort of rinse out some of this speculative energy. I'm optimistic. I'm optimistic that is the case. I'm optimistic that if some of the DATs sell, maybe we'll enter a stage of some mergers and acquisitions, a bit of consolidation there. Some of the bigger DATs will probably acquire, discounted Sol, if you want to call it that, from the smaller ones. But I'm crossing my fingers. Now, story number 2. This is a very, very interesting one. We've been talking about the inflation proposals for a long, long time. You'll recall SIMD 228 was a very contentious topic when it sort of rose to the forefront of discussions on CT. It alienated some people. It didn't end up passing. The idea was to reduce emissions, reduce inflation. And now Finn explained the details to us, because I feel like we're at a bit of a turning point where Sol could actually become deflationary, assuming the two SIMDs that are here in the article actually pass. And one final point I want to make is we spoke with Lucas, the co-founder of Jito, yesterday, and I sort of pressed him on when he thinks, assuming again that they both pass, Sol could eventually become deflationary. And he said maybe within about 18 months. So yeah, curious what your read on all of that is, Finn.
Yeah, look, we can get to Lucas's prediction in a sec. I think probably the best way to start is to set the ground level of what these SIMDs actually do. So the first one, SIMD 0550, this was actually first submitted in November 2025 under the SIMD 0411. This is pretty much the same idea. They've had to, update some of the numbers and some of the explicit implementation. But what we're looking at is it's going to accelerate the disinflationary rate of Solana from 15% to 30%. That effectively gets us to our terminal inflation rate of 1.5% per annum, about 3 years ahead of schedule. While that might not sound like much in the beginning, that saves us around $1.5 billion in emissions. People have been saying that Sol inflation is far too high for far too long, and that's why the price is performing as poorly as it has been. This effectively counters that. It's a much simpler solution than SIMD 228, which in my opinion was brilliant, but apparently the market wasn't ready for it. Look, I expect this is going to go through very quickly. I think everyone's very eager to get this tokenomics drama solved. And this is a very simple thing that a lot of people understand very easily. Basically, inflation goes down, price should hopefully go up. It seems to me like a done deal. Now, the second one, and this is a lot more complicated, but perhaps a lot more interesting, is SIMD 0553. This was presented at the start of the week as SIMD 0547. Like the previous SIMD, this has also been updated, has been slightly revised, and had some slight changes, but the premise is very much the same. This was submitted by Temporal's Caveman Loverboy, obviously a very, very talented engineer who is very well known and respected across Solana. The idea of this SIMD proposal is to create a base fee that what's the best way to describe this? The base fee is going to be dynamic. It's going to be based on the resources used per transaction. So effectively, simple transactions aren't going to cost a whole lot. Very complex transactions are going to cost a bit more to go through, and that's going to create a burn fee. And a lot of that Solana is then going to be burnt. So the more complex the transaction is, the more Solana gets burnt. And effectively, what we end up with is we have a lot more deflationary pressure on Solana tokens. So some blockwork research here was done. They expect that further down the track, we could see around 21,600 Sol burned per day under this new design. So look, if we get both of these SIMDs going through, we're going to have less emissions from the emission schedule, and we're going to have more token burns per day. Now, hopefully these eventually converge and we get net deflationary. I don't know if that's going to be in 18 months like Lucas says. It might take a wee bit longer. We probably need to see a lot more activity on chain before that's the case. But it's very optimistic. It's very encouraging for Sol as an asset. I think it solves one of the problems that Solana's had for a very long time, wherein we've got this incredibly rich and diverse app layer, but Sol itself is a terrible asset to hold. There's not a whole lot of value accrual that goes from the app layer to Solana. We've seen Hyperliquid have enormous success because it allocates all its revenue to supporting the token, whereas Solana, that's kind of an afterthought. There's an argument that it's healthy for Solana to have a low Sol price because that makes development costs low. But I think a lot of people just want to see Sol go up. So both these go through. I think the stage is set for a incredible recovery for Solana long term. Thomas, I know that's a lot to take in. What's your knee-jerk reaction?
Yeah, I'd say overall, like this is extremely exciting, and I think it's needed, right? I think we need something for like big investors to get excited about, right? Like there needs to be some changes. People have talked about this, that inflation's a little bit too high. Add in a little bit more, fees for more complicated transactions. It kind of makes sense to me, right? And I think that like the combination of both of these passing and some exciting new protocols coming out, they make a great case for Solana, right? Like I think that you can kind of look at the market right now, the crypto market in whole, and you could say like, all right, the market is valuing strong tokenomics, right? Like the case for Hyperliquid with hype, with buying so much of their token back, like it's hard to look at that and not say like, all right, what are we doing here with all of this inflation and not buying the token back or burning it, right? So I think that it's hard to ignore that. And I think that, with a couple steps that it seems like most people want these, right? So I think that this is going to be pretty positive. I'm excited about it. I'm sure that there's probably some implications I'm not thinking about, but I think like on the whole, like this is exciting. This makes me want, this makes me see like a bright future for Solana even more.
Yeah, look, I think you made a very, very interesting point there about Hype's tokenomics. And if Sol as an asset is going to attract capital the way Hype as an asset has done, the window for these proposals is now. Basically, bear markets, as we know, make it much more possible than in a bull market for these tokenomics reforms to be discussed without some of the day-to-day noise, even though it's very noisy on the timeline right now. They make it possible for these tokenomics reforms, if you will, to get passed. And an interesting parallel here is we also forced Lucas to answer the question. He didn't love it, but we forced him anyway. He said, would Sol price currently be higher if we had passed SIMD 228 way back when? And he said, possibly it would have been marginally higher, but nothing significant as a direct result. So, I mean, I agree with him on that one. He actually didn't answer the question as to whether or not it was a mistake, but I think the time is now to sort of get our act together, if you will, now that it's in a bear market, get these passed and make sure Sol becomes a much better asset in terms of value accrual, a much more attractive asset going forward as net new users, net new buyers come in, as we sort of enter into a bull run. I think that's going to be very important.
Yeah, and I do want to hammer that home. Solana's app layer is the most rich and versatile in all of crypto, and I think it's a tragedy that hasn't been properly bootstrapped to send value to the token. I think we solve that. We solve a lot of the contentions around Sol as an asset, and we fix a lot of these tokenomics concerns that have kept people on the fence and supposedly hampered Sol price. So I expect both of these proposals to go through very quickly. I expect support for them to be almost unanimous. There are some arguments against. I think those arguments aren't going to be strong enough against the people who just want to see token go up. So yeah, I'm expecting this is going to be a bit of a washout for these two.
Can the devs do something? Says Finn.
Devs are working. Devs are shipping.
Devs are working. Absolutely.
Yeah, and when you think about inflation, like inflation, especially for Solana, like that's to grow the network, right? Like a lot of that's to like help reward people that are contributing to the network early on. And Solana's big, it's grown, right? Like it's gotten to the point where it's sustainable, so they don't necessarily need to keep inflating as much, in my opinion.
I think everyone holding Sol with a negative PNL would agree with you. So make number go up, please. I think is the conclusion that I'm getting from this on the retail side. But we have to talk about this because it blew my mind, completely blindsided me. I did not see it coming. And if anyone thinks that they saw this happening, I think they're out of their mind or they're trading on insider information. So the headline is former US presidential candidate Andrew Yang's Noble Mobile acquires Helium Mobile. What happens to HNT? It's a great question, Finn, and I suspect you're going to tell us exactly what happens to HNT. But a tiny bit of context first. Andrew Yang is a former US presidential candidate who I think became very famous, and he made headlines around his universal basic income pitch. You might recall some of the Yang Gang memes if you're around in, I think it was the 2016 presidential election. But he owns a company called Noble Mobile, and they acquired Helium Mobile. It was a bit confusing at first because people were basically saying, well, what is this centralized entity buying a decentralized network for? The reality is a little bit more nuanced. Finn, we've been covering actually Helium Mobile's global expansion to places like Mexico and Brazil for quite some time now. We've been covering their milestones, the sort of daily active users, if you will, and the hotspots that they have. Am I correct in saying that there was a $10 million seed round? And I guess more importantly, what is Andrew Yang doing buying deep in projects?
What Andrew Yang is doing buying deep in projects, I can't necessarily answer that. I think that's you'd have to ask him that directly. Maybe we'll have to get him on a different show. Seed round in question was held in September, I believe, and that was for Andrew Yang's Noble Mobile. I'm not sure what the vision is here from Andrew Yang. I guess having a telecommunications protocol is probably very helpful if you're trying to get your message out there. But we're most interested in Helium at the HNT token and the Helium network for this. So look, it is very confusing. Helium Mobile is it's a mobile provider. It's a business. Helium network is the DeepIn powered network of hotspots and DeepIn powered economic flows. So Helium Mobile, the company, has been acquired. The Helium network remains as decentralized as it ever has been. Helium Mobile's messaging has been that the transition is going to be as smooth as possible. Customers are going to be able to keep their numbers. There might be some pricing changes that was addressed in the FAQs, but look, that's all very much downstream of the immediate reaction here. Look, I'm very curious to see what happens now, because obviously, as soon as this happened, we've seen a huge amount of changes in the staffing at Helium. A lot of people who, were previously there at the forefront of this Helium network company are now stepping into chairman roles. They're stepping down. They're moving to other protocols in Solana. So this is a complete change up in what's going on for Helium. But at this stage, HNT, the token, is relatively unaffected. Price hasn't really moved. The Helium network still exists. People are still operating hotspots. People are still getting paid to operate hotspots. And a lot of that carrier offload is still getting moved around to other networks like AT&T and those other, American telco giants. So exciting for Helium Mobile to get acquired. We love to see crypto companies get acquired. Good for everyone who operates a hotspot because their life isn't going to change. But a lot of people very confused about this move. Thomas, you're over in the US. You're probably a lot closer to this. You probably have a much more informed opinion on Andrew Yang than I do. What's your read here?
The Yang Gang. Yeah, I mean, it's definitely interesting. I like the name Noble Mobile too. It's just hilarious. I don't know. I don't know what this means for DPIN, really, right? I use Helium, right? I've got Helium phone plans. They're great. They're cheaper than a normal phone plan. It works. I used to get crypto coins for like mining it as I was using my phone. Now I don't. So like I don't know where this leaves them, right? Like I love Helium. The team is great. And what this purchase really means for DPIN, I don't know, right? Like Helium's been one of the biggest DPIN teams. Like it's like when I think of DPIN, like my mind immediately goes to Helium because they've been around for a while, right? Like they merged over to Solana a while back. Like they've been like very, I don't know. It's like the project that you look at when you think of DPIN, at least for me. And then I look at the token, and the token, it's like nothing you can do can pump this token. So it's like I don't know. I don't know where this goes. Obviously, like I don't hold HNT, and I think a lot of like the incentives for a lot of DPIN might be being proved out with this, right? You mine the token and then you sell the token to pay for your infrastructure, so the token goes down. I don't know. Like, is this something that Andrew Yang is? Is this like an entrance into crypto? Is this like a vote behind DPIN? I don't know. Like, does he just view it as like a telco company? So I don't know. I don't know where this leaves us, but I mean, it is exciting. Like a very big, prominent person, Andrew Yang is buying this, so it's exciting. I don't know. Like, what do you think, Finn?
I mean, I suspect he's acquiring a huge amount of subscribers as well, because obviously
Yeah.
everyone who was a Helium Mobile subscriber is now a Noble Mobile subscriber. So this is a very efficient way of bootstrapping a large user base of people who are obviously very committed to the product. Now, if you go ahead and you assure them that there's going to be no changes to services, prices are going to remain more or less the same. And I believe that Noble Mobile, the whole premise is actually that you pay for your plan and then you get paid back for things that you don't use. So it incentivizes people to not use their phone. Maybe that's a net positive for the world. Who really knows? But yeah, I see this as a customer acquisition play. I don't know what his grand vision is. I think it's probably quite convenient for a former presidential candidate to have a telecommunications network and have all these subscribers, and that's obviously unmatched distribution that he's going to be able to access. So look, I'm curious to see what happens to Helium from here on out. I would like to think that HNT, as they've said, it remains consistent. The Helium network continues to function as is. Hotspot operators continue to get paid, and it proves out the thesis for DPIN in general, right? Because if this had been acquired by a single person, that would be a bit of a damaging blow to DPIN's credibility long term. So hoping to see that this all gets washed away as a big success in the coming months.
Yeah, I mean, it's a good play in general. They have a lot of customers, they have a lot of users, and it's in multiple countries, right? I think they had success in Mexico, going to Brazil. So I mean, maybe it's an interesting business. It's like I just wonder how much of the crypto part they're even concerned about, right?
I think they're probably going to abstract that entirely away. I think
Yeah.
I think Andrew Yang probably doesn't want his new subscribers to be knowing that they're engaging with crypto. Obviously, everyone who used Helium Mobile will, but he's obviously got larger ambitions than that. So we'll have to be keeping a very close eye on that. But I believe we can probably keep pushing forward onto the next story. I think Jack might be having some technical difficulties, but we can push forward here. We've got next up story number 4. Sanctum's INF yields 8.2% higher APY than Solana network median since V2 upgrade. Now, I love this. Obviously, we're big fans of Sanctum. I think they do an incredible job. INF is one of the better LAC tokens in the entire ecosystem. And now we're actually getting empirical proof that this is the case. So about 10 weeks ago, maybe 11 weeks now, Sanctum released INF v2. It smoothed out the yield curve. It distributed yield to LST holders on a per slot basis. It was really, really well received. And we can see here that after 10 weeks, they've done some good data analysis. And what they found was that the average APY for INF was 6.28%. Now that beat out MSOL at 6.09%. It beat out GeoSol at 5.69%. And it beat out the LST median, which trended down from 5.8% to 5.59%. So comparatively, this gives INF holders an 8.2% competitive yield edge relative to the LST median. So if you're holding something like BN Sol, if you're holding some, random white labeled LST that's been spat out, if you're holding INF, you are doing really, really well here. Now, I think that this largely comes down to the value add. As we know, Sanctum's INF, it draws value from numerous sources. Obviously, there's the emissions, there's MEV capture, there's block rewards. But by swapping LSTs between each other in the infinity pool, there's a bit more value flow that goes towards INF, and that's where a lot of that comes from. Now, if we go back to these SIMDs that we've seen previously, if we reduce emissions, then a lot of staking yield is going to come down. And if staking yield comes down, then obviously LSTs become less attractive. However, LSTs with value-added economic flows like INF with their trading fees, they're going to get not a boost, but relative to other LSTs, the gap between the yield that they earn is only going to grow larger. So LSTs with value-added economic flows like INF are going to do incredibly well in the future. As emissions drop, the relative gap between INF and other LSTs is only going to grow. So if you're sitting in INF, I think you're making a really good decision as far as getting that yield on. Thomas, what's your read on Sanctum's trajectory at the moment?
Yeah, 100%. I think the competition for LSTs is getting much higher. The competition for Solana staking in general is getting a lot higher as those rates have been kind of coming down, right? So especially if we do see these SIMDs actually pass, then yeah, the actual rate is going to be lower than this, and that makes INF even more attractive, right? I think they called it something like an index of the best validators. And then you also get that additional revenue source where when you're a user and you swap between, one LST and another, there is a small fee associated with that, and that goes to INF holders, right? So it's consistently at the top of all LSTs. So it's a good product. I mean, we're fans of Sanctum. I've been a longtime fan of liquid staking tokens, and just the simple fact that when I native stake, it goes out of my wallet and I don't see it. It comes down to as simple as that. I like the optionality of being able to, swap out instantly if I want or anything along those lines. But I think that this is great, and I want to kind of continue to see them at the top. So it's good news. And it looks like we got Jack back. What do you think?
I'm
Jack?
back. We are so back. We had a Europore internet connectivity problem. We had a power cut, but we're back. Nothing to worry about. Not sure if you guys have touched on this already, but what I find super interesting here is something that you brought up a while ago, TB, which is the tax angle of liquid staking versus native staking. Did you guys touch on that at all?
We didn't. No.
Yeah, I think it's fascinating that simply by virtue of liquid staking, you get to essentially avoid a series of taxable events, right?
Yeah. So the way that the rewards you actually receive them, it's not like native staking where you consistently get small rewards every epoch, right?
I think that's pretty cool.
I believe the distinction is that the value of the LST itself goes up rather than receiving new units of currency, which becomes a taxable event. Now, obviously, none of us are tax accountants with a US background in accountancy or tax declaration. So I would be very hesitant about taking our advice on this. But from the research that we've done, that would appear to be the case. But obviously, verify everything with your own tax-related accountants.
Needless to say, but very important to repeat, this is not a show from which you should get any tax advice, investment advice, financial advice, or life advice. We are not here to advise anyone because we are not advisors, but I do find it fascinating that liquid staking can essentially have this added benefit of potentially reducing some of your tax liabilities if that's what your tax advisor advises you to do. Now, we do, in the interest of time, have to switch over to our next story, which I personally find fascinating because On the one end, we've got the Zcash story, the vulnerability that was discovered by an AI chat, essentially, by Opus 4.8. And on the other side, Certora has formally verified the Solana P token upgrade as equivalent to SPL tokens. So I'm not going to give too much context on this. Finn, give us the TLDR of why this is important and how it sort of it's completely opposite to the idea that Zcash, this revered privacy protocol, is potentially vulnerable. And then on the other end, Certora is making great strides.
Yes, I love this update from Certora. I think this is a massive step forward for Solana as a whole. I won't go too deep into the weeds because this is extremely technical, but I'll break it down as simply as I can. Anyone who uses Solana at the moment, they have tokens in their wallet. These tokens are typically SPL tokens, which stands for Solana Program Library. This is the existing standard that came out basically at the very beginning of Solana's birth, and that's what we've used pretty much ever since. Obviously, there's been some slight changes here and there. Metaflex has done a huge amount of work on that, but effectively, SPL is the gold standard of the token standards on Solana. Now, P token is coming in. P token is built to be infinitely more efficient. It's written in Rust Pinocchio, and effectively we get 20 times more efficiency, and we can pack around, I believe, 12 to 13% more token instructions into each block by doing so. So token instructions are going to be 96% cheaper in terms of compute costs. This means that the network itself is going to get hugely more efficient. We're going to cut down a lot of this network bloat. And I think that P token, alongside the SIMDs we've talked about before, is really putting us in the right direction to have an extremely performant chain that is hyper efficient on compute and breathtakingly fast. So this is, for me, this is IBRL in a nutshell, these three all coming together in one package. Now, Certora is a security firm, one of the most reputable security firms in all of crypto. They've secured over $100 billion in TVL. They're absolutely everywhere. Now, at the behest of the Solana Foundation, they have formally verified that P token is equivalent to the SPL token. So that means that the best people in the industry looking at equivalence and security have given this the thumbs up. And from here on, P token can basically be dropped into existing Solana programs instead of SPL in selected programs. So obviously, it's not going to be a blanket ubiquitous change, but in a lot of programs, P token can replace SPL. It's going to make token instructions 96% cheaper. It's going to make transactions 20 times more efficient. And I believe it's a massive step up for the ecosystem in terms of efficiency. Thomas, how are you feeling about this?
Yeah, I feel great. I mean, the formally verified is massive, right? Especially right now. I think this is something that's going to be really important. I think more programs and more protocols are going to need to have this basically moving forward. The vulnerabilities out there are scary, and with what we just saw with Zcash, price reflects that. So I think it's interesting, and I think Solana privacy is kind of underrated right now. I think there's a lot there that has got me excited. But yeah, I mean, I don't know. What's your guys' take on this? I mean, I feel like if formal verification is incredibly important, is that going to be enough for all these vulnerabilities?
Well, I think it's a prerequisite.
Yeah.
Is it enough to get to the sort of final frontier of we are quantum resistant, we are we've dealt with all of the smart contract risks, we've dealt with counterparty risk, we've dealt with DPRK social engineering risks? Of course not. It's not a one-size-fits-all solution, but Certora is one of the most reputable companies out there, as Finn mentioned. So I think it's a prerequisite. We need to make these steps. Clearly, Solana Foundation sees value in this as well. These are, to me, non-negotiable moves in the right direction. Now, one of our audience members commented, your thoughts on Zcash ecosystem? And I think it ties in nicely here, because during the same week that this Zcash privacy protocol vulnerability was found, Certora is obviously, again, at the behest of Solana Foundation, making all this progress with P token. And it just paints this interesting picture to me that it's not just you win some, you lose some, but the entire industry is under attack. And without people like Certora, without the researchers at Certora, without Solana Foundation saying, you guys should go ahead and do this, we would arguably be in a much, much worse position. Now, as far as Zcash goes, to answer this specific question, I'm going to throw it to you guys because I'm not going to name them, but a colleague of ours, a great trader, I asked him this morning what he thinks the long-term sort of Zcash ecosystem is going to look like. And he said, well, now the Zcash thesis has essentially been fully invalidated. So the price could well crash to below $100. And in the long run, we're likely looking at a scenario where Monero's XMR is likely going to be worth more than ZEC in the long run. Any thoughts on that? Are we going to go even lower with ZEC?
I'm hesitant to put price predictions on coins that I don't have a extremely thorough understanding of.
Do it anyway.
I think ZEC probably continues to go down a wee bit lower. Maybe it moves up from here, but I think the scale of what has happened and the idea that maybe it's been exploited and we'll never know, and we won't be able to know without compromising the privacy thesis, puts everyone who is backing Zcash in a very difficult position. How important is privacy really? Is the question that comes up a lot with this. People love privacy when prices are going up. Do they still love privacy when prices are going down? Look, I've heard the other argument here is that this is not the first time that this has happened to Zcash. There's been very, very similar issues where people have found similar vulnerabilities that have asked a lot of the same questions, and Zcash has still existed today, and it still had the price moves that it has had very, very recently. So I don't think this is existential for Zcash. I think it puts a large asterisk on it for this particular cohort of people trading crypto today. Maybe that means that Zcash goes back down to $50 where it was before this face melting rally it's had. And maybe in 5 years' time, we get a new cohort of privacy traders and Zcash goes back up and it does what it's done the last few months. Thomas, what do you reckon?
Yeah, I think the problem right now is like a lot of the short-term narrative for Zcash is broken, right? It had a very simple narrative. It's encrypted Bitcoin. But I think that with this, it provides a lot more doubt than people are willing to put in the market right now, right? It's encrypted Bitcoin where you can't necessarily verify any of the encrypted Bitcoins, So yes, there was a bug that could have potentially been there for 4 years. It was just found, was it exploited? We don't know, right? And that uncertainty is the issue, I think, right? It's not as simple as quantum resistant or whatever they're called, quantum safer Bitcoin, right? So I think it lost that narrative in the short term. However, I am still bullish long term. Like I like the idea of Zcash. I like privacy. I liked a lot of aspects of it, right? Like it really resonated with me, and I thought that it was like, if something like this didn't happen, it was on a great trajectory. A lot of people surrounded it. They had a lot of they have a lot of good engineers building this. So like it's interesting to see how they're reacting to this. And I don't know, short term, price is going to go down. I still think that it's actually more interesting than Monero. I know that, a lot of this comes down to stuff that we don't know, right? Like extreme cryptography, the amount of people that probably understand the differences, maybe 100 people in the world, like it's very hard to get down to like what the differences are. But it seems like a lot of the smart people tend to say like, all right, Zcash is actually like the better cryptography, more hard. But if there's bugs in it, then that makes it a tough sell. So is it going to go under $100? I don't know. I mean, it doesn't seem like it's going to recover instantly. But if it does get under $100, I'm probably a buyer.
Okay, there's a really interesting parallel here that I want to surface. So,
sure.
Thomas, you were a big advocate of NFTs. You and I have traded a lot of NFTs over our time in this industry. And the ongoing joke was that art looks a lot better when the floor price is high. Is that the same for privacy? Is privacy a really important sector that everyone needs to be paying attention to when Zcash is $600 and at $50 the art actually sucks? I feel like there's a similar psychological game at stake here.
Yeah, well, I think actually, I mean, yes, that's true. I mean, number goes up, sure, privacy looks great, but I think the other side of it too is like, a lot of what we're seeing in like governments, a lot of like overreaching, like if you transfer, like a lot of people in the US use Venmo, it's like PayPal's product where you send dollars to people. If you sent over $600 worth of it, like you had to like document where you were sending it, like they want to track your money. And especially with like, I think it's a good balance with what we're building on Solana, right? Like Solana has so much transparency, right? Like everything you do on chain right now, you can track really well. So to have like, a small portion of your portfolio where it's like, all right, this part can't be tracked. It's just like attracting, it's like very attractive to me to kind of have like a little bit of a balance on that side. But, like I said earlier, also, Solana's privacy, I think, is a little bit underrated as well. Like the Umbra wallet, like that thing is looking pretty good, right? And you can just shield any Solana asset, or at least you will be able to directly in the wallet. So I see something like that, and it's like that almost is more of what I want than, you know, a siloed Zcash thing. So I don't know, you know, it definitely looked a lot better, you know, when it was $700. But yeah, I think there's a lot there. I don't think that narrative is going away, right? Like
It's
I
not.
think that demand was
There's no
shown.
way. There's absolutely no way the privacy narrative dies because of one vulnerability being discovered.
Yeah.
A vulnerability
Yeah.
that's been discovered before as well, apparently.
Yeah,
You know,
by
similar
Claude, no
scale.
less. Yeah, discovered by Claude. I think that's really worth reiterating.
Yeah.
Someone
So
literally
it's quantum
typed into
resistant,
Claude.
but it's not opus resistant, right?
Yeah.
Lesson in that. All right, we, in the interest of time, have to move on to our final story. This one is a bit of a banger, actually. We so often joke about shippers shipping and the insane rate at which Jupiter keeps shipping. The headline, as you can see, is Jupiter unveils forecast, Solana's first native prediction market. I find this fascinating. We've been talking about calcium polymarket for a long, long time now. Between the two of them, they're valued at $37 billion, billion with a B. The prediction market valuations are through the roof. And now finally, we're happy to report that Solana has its horse in the race. And it's launching with weeks to go before the biggest sporting event in human history. As Finn writes in his newsletter, the World Cup is happening, the Football World Cup, the Soccer World Cup, depending on where in the world you're from. Finn, what is forecast and why does it matter for Solana?
Look, I love this. We've been speaking for the last few weeks about how Solana has failed on the perps and prediction markets front. Prediction markets being one of the biggest breakout, blockchain Rails-based apps that we've seen in the past few years, and Solana has not had a horse in the game since this has come out. Polymarket and Kalshi dominate everything, and Solana, the chain basically that people have said is designed for retail users, has not been able to find that share of success. Now, I love what Jupiter is doing here. So Jupiter is bringing, through forecast, they're bringing prop liquidity to prediction markets. It's all happening on chain on Solana. As Solana's first native prediction market, I think it's fantastic. But here's the great solve, right? So Polymarket and Kalshi, brilliant protocols, done extremely well. One of the constraints people have had is that liquidity is outside of major markets is very poor. You can't size into a lot of markets without causing huge price impact, without getting the execution that you want. So outside of the headline markets, Polymarket and Kalshi are not actually that efficient for a lot of traders. Now, Jupiter, the very cracked gigabrains over there, have found a way to use prop liquidity directly for these prediction markets. Market makers can come; they can choose the markets that they think are going to be valuable for them to market make on, and then buyers can trade directly against that. So hopefully, what we're going to see is much deeper liquidity within individual markets. And Jupiter, obviously, they have an extremely strong track record of great products. I'm sure they're up to this. And we mentioned this briefly last week, but prediction market volume on Jupiter's existing product has been steadily rising. So I've got a graph right here in the newsletter that shows that over the past 3 months, Jupiter predicts monthly volume has hit a new all-time high month after month. So the demand is there. People want to be trading prediction markets on Solana. Jupiter is bringing that onto a Solana native experience, and they're bringing prop liquidity to make sure that it all happens as efficiently as possible. So hats off Jupiter. This is a wonderful update. I'm very much looking forward to seeing the impact this has amongst the World Cup followers amongst us. So this is the biggest sporting event in the world. You've got 5 billion people actively engaged, and this is going to be an absolute hoot for people who like speculating on sports. Thomas, over in there, and you're going to be on the ground actually, where all this is happening. Are you going to be dipping your toes into this new prediction market paradigm?
100%. I'm going to pretend to love football for the next few months, and I've been wanting prediction markets on Solana since the start, right? Like I don't want to use all these other protocols, so I'm going to be shouting this off the rooftops. I'll be openly shilling Jupiter's prediction markets. Like there is no way around it. Like I want this to explode, and this is the right time for it, right? Right before the World Cup. I mean, it's kind of like a high leverage bet on whether this can work. And I mean, Jupiter's done a lot, right? Like their mobile wallet is fantastic. So I mean, combine that with their platform and having this, like I think it's set up pretty well. I would really like to see it take off, and we'll be shouting this that people need to be using it more. And it's exciting that they're using the prop liquidity as well, right? So I know that there's like you mentioned, there isn't liquidity on a lot of the smaller markets on the other platforms. So it's good that Solana's, solution for what we've seen has worked for a lot of other products could come to this as well and really, really work there. So I don't know. This is overall like this is very exciting. Like I'd love for this to break out into mainstream.
For all the sports gamblers, it's particularly exciting because Finn told me, and I'm not quite sure as to the full details on this, that there is, correct me if I'm wrong, Finn, a free way to get involved with betting on, is it 5 games outcomes from the group stages of the World Cup? Is that correct on Jupiter?
Yeah, so Jupiter Predict, they're running this campaign at the moment. I'm not gonna shill that too hard on their behalf, but yeah, go check it out. I think they're doing some small free bids for people who try and put 5 together that are all going to win. So yeah, go check that out. Look, I would encourage everyone to get their toes dipped into this new prediction market meta that's brewing. There's Jupiter's not the only team who's hyper fixated on this. Seraphim had a tweet a few weeks ago saying that there's going to be a lot more of this coming from other extremely high profile teams who execute at a high level. So I think the prediction market race on Solana is just beginning. There's going to be a lot of horses here. Yeah, I would encourage everyone to try everything out. And I think prediction markets also come to JTX a bit further down the line. So it's going to be everywhere. Acquaint yourself with how it all works now, and maybe there's an edge to be had with all this going on.
Very, very interesting. Now, we are nearing my favorite part of Finn's newsletter every week, which is the honorable mentions, followed by the state of Solana in a tweet. And we have the stat of the week as well. So, Finn, do you want to run through these honorable mentions? They seem overly optimistic, very bullish across the board, given the price action. I think is quite surprising. Talk us through it.
Honorable mentions in a difficult week. Solana Foundation announces launch of native subscriptions and allowances on mainnet. Raikou launches RK Sol, the first LST to include block space revenue as a yield source. Ore Supply launches a quantum safe smart wallet. MasterCard enables always-on stablecoin settlement on Solana. Phoenix launches cross-chain deposits. Solana Mobile launches dApp Store publishing portal and DeFi portfolio tracking. And Bulk Trade opens mainnet pre-deposit campaign, amassing $19.8 million in TVL from over 48,000 wallets. Good list. Thomas, what stands out?
I'm gonna go with Ore. So I love Ore. You can see the hard hat up there. I love that they're like at the forefront of a lot of what's coming down, right? So they integrated the Falcon wallet for a quantum safe wallet. Like it's still in like the command line interface. So I don't really know how to work those very well, but like it's cool that they have a project where they can test this type of stuff out on, right? This is like the very forefront of like quantum safe technology. So it's pretty cool. It makes me excited. What are you thinking, Jack?
Oh, it's easy for me. Particularly if we're shilling objects that are already in the room. As you can see, I've got a Seeker box behind me. I've got a Seeker here in my hand. It's easy. It's Solana Mobile launching their dApp Store publishing portal and DeFi portfolio tracking. Now, the portfolio tracking is something that we're all very familiar with. There's multiple solutions out there. It's great to also have one on the Seeker. But more importantly, I think the dApp Store publishing portal, because last week we launched the first episode of Shipped. This is a monthly live stream series with the Solana Mobile team. We're basically diving deeper into the Solana Mobile ecosystem than anyone has ever done before. And every week we are being inundated with stories of builders, of either people building in public or people that want to ship. And you've got people like B-Man who are making it easier with new frameworks for developers. So I think the Solana Mobile ecosystem is going to continue expanding, exponentially growing. So I think that dApp Store publishing portal is going to be very interesting. You can go also to solanafloor.com/seeker, I believe it is. We have a Seeker hub there. That's going to give you a long list of all the active perks, all the past airdrops, so on and so forth. And to see the number of apps that are active, you can go to Seeker Tracker. So some interesting resources there. Finn, don't tell me, is it Bulk Trade your favorite?
Yeah, look, it's going to have to be Bulk again. Look, I'm extremely optimistic on Bulk. I think it has a solid chance of being Solana's leading purpose venue in the next few months. And look, the demand is there. It is palpable. Obviously, 48,000 wallets suggests there's probably a lot of people sibling this and spreading capital across a variety of wallets. That's always going to happen. But $19.8 million in TVL. Look, people want to be exposed to Bulk. They want to have things at stake in the amassing Bulk ecosystem. I'm very, very keen to get this app out on mainnet and start trading there directly. So yeah, going to be bulk for me.
Interesting. Now, you can see also here that we have staking is made simple by Sanctum's mobile app. It is already live on the Seeker. We just mentioned the Seeker. So if you want to get 8% APY in your Sol, you can do that on the Seeker already. Stat of the week. This one took me by surprise. Finn, people are saying that this is an interesting indicator, sort of a forwards indicator of when BTC price might start to skyrocket. But talk me through this chart.
Yes, so here we have short-term holder realized profit and loss ratio on Bitcoin. Now, Frank A. Feder here said that this is the biggest short-term holder capitulation in the history of Bitcoin. So what does this mean? This means that all the tourists who arrived that we talked about earlier that wanted to get a quick 2x on Bitcoin and then depart have all left the arena. Bitcoin is once again in the hands of its diamond-handed holders who believe in the asset until $1 million. This is encouraging. This means that perhaps we've found a floor. I suspect we probably still go a wee bit lower, but maybe not a whole lot lower than that. It's encouraging, right? If we map this chart here, every time that holder capitulation has been this low among short-term holders, it's usually marked a bottom around the kind of next 3 or 4 months. So very encouraging. I'm hoping that this is going to be a similar circumstance as we've seen over the past almost 20 years now, almost, in Bitcoin's 17, 18-year history. This has been a trend that has been referred to again and again. So I'm optimistic.
Fingers crossed. And the state of Solana in a tweet. This is an absolute banger from Toli.
Yes, totally. Thank you very much. Due to market conditions, rebranding to an alt from a major. Earlier in the week, alts were doing incredibly well compared to majors. Majors are bleeding out. Alts like Hype, like Zec to a degree, were doing incredibly well. Totally on point as ever. Social media game, very, very good for a founder. Due to market conditions, rebranding to an alt from a major. Yeah, well timed. Very funny. That is the state of Solana. That's how everybody's feeling right now. Earlier this week, people were watching coins like Hype going up while majors completely collapsed. And we were wishing that it was us. We were feeling sidelined. So it totally encapsulated that perfectly.
Absolutely. So a bloodbath in the charts, very optimistic as far as the builders and the developers go. I think, just as optimistic about the future of the ecosystem and the industry as I was last week. Definitely significantly poorer than I was last week, but that is the nature of playing with magic internet monies, I think. What are your takeaways from that divergence, let's say, of the bullish energy that we're getting from the builders that we talk to, the bullish energy that we're getting from all the TradFi folks that we talk to over also on the big picture, and then this overwhelming negativity that we're seeing on CT?
Yeah, I mean, the team. Oh, you go ahead, Ben. Sorry.
I know you go on, Thomas.
All right. I was going to say the teams are shipping. People are chewing glass now, and I feel like it matters more than ever, right? It's the teams that are showing up and building things right now. Like those are the teams that you want to watch, you want to invest in, and like I'm genuinely excited to try bulk as soon as it comes out on mainnet, right? Like I'm excited to see what people are building, and even more so than I was when prices were super high, right? I feel like now it's like, all right, some of the fluff has gone away. Like if you're building and shipping now, like it has to be a hardened, like competitive product. So I can't wait to see it.
Deposits are already open, right? Finn, you probably know about this for bulk. If you have a referral code, I think.
Yeah, I do have a referral code. I'll drop that to you in a message later. I'm not going to drop the referral code on stream.
Give me the ref link.
They've got 19.8 million people. People want it. People want exposure. No, look, my biggest takeaway from the last week is that Solana is in a better position than it has ever been at a fundamental and technical level. Look, even in this news that alone, we have P token equivalents. We have the 2 SIMDs that are going to reduce inflation and ramp up token burns. Tokenomics are going to get better than ever. IBRL thesis is intact. The BAM Maker plugin is making market making on Solana more efficient than it's ever been. Solana remains the best place to trade spot assets. We're getting there with perks. We're not there yet, but we're getting there. I'm arguably more optimistic on Solana than I have been in the past year. Price is irrespective of that. Solana could go to 40 tomorrow, and I would be absolutely besotted with the opportunity to get Solana at $40. I'm extremely optimistic on the future of Solana at this point, based on everything that we're seeing away from the charts. So, look, I can't wait to see what the next few years hold.
Lots to be bullish about. Lots to be bullish about. I'm certainly not complaining. Ladies and gents, we will be back next week, same time, Friday, 11 a.m. ET, for another weekly recap of the top 6 stories that are shaping the Solana ecosystem, but also a bit of a view of the macro world and how that's impacting prices, charts, so on and so forth as well. See you there all next week. TB, Finn, thank you very much for talking us through, and have a great weekend.
Thanks, guys.
Thank you, Jack.
Have a good weekend.